Good day, traders, or should I say good morning, good afternoon, good evening, traders from across the globe. It is Tuesday, July 17, 2012. It is midday. We left off with a video from this morning stating that we were going to start the morning off by selling rallies and then let the market tell us what happens once it dips down. And I had a pretty good reason why we were going to behave that way. Before I show that to you, of course, you can see on the chart one of the reasons. Let me just say that we all know that futures trading can be extremely risky and cause substantial financial loss. If you do not understand the risks behind trading and if you do not use stops, you should not be in this game. As we know, it's future trading is certainly not suitable for all trading accounts, but let's rock and roll. Let me show you what I have. So this morning we put out a video that we filmed late last night to say we wanted to start Tuesday off by selling rallies, and let me show you why. This is what we were looking at, and we thought that, okay, when it opens up on Tuesday, it's going to have to get through this do or die level. Why is it a do or die level? Because you can clearly connect 3, if not 4 days highs to this. You can almost call it 5 if you pull it down right here. All these highs hit. That is a very solid resistance line. It is absolute resistance, and if you're an analyst, this is where you would expect the market to stall. So I looked at that and I said, very well, it looks like it could stall here. No way can we start this day off as buyers. We have to let the market tell us what's going to happen first. So the video I put out for you was to let you know that we were going to start the first Omni by selling into this area. And when it comes down, we'll look to get out. And if it holds, maybe we'll go flip towards the buy side. So that was last night's analysis on the Russell. And here is what's happened since. The Russell got to that line, got a little higher, turned around and broke all the way down here. We were short. It broke. We exited our short trade. Then we opted to long the market. And the market went higher. So the analysis was picture perfect. It bounced off this line. It dropped for the morning session, and the afternoon session started to rally. Omni wanted to be short for the morning session, as you knew in the prior video. And then Omni decided it wanted to be long in the afternoon, although you knew that from last night's video. And it worked. Technical analysis works really, really well if you stick to it. What you will do with the information, knowing it was probably going to drop first, then turn around and rally, is another story. That's trading. Doing the analysis behind it, however, is not all that difficult. How you will handle the trading, we all know we're human. That is a completely different story. But the analysis was there. So I showed that Russell chart to you last night, mentioned that that's how we'd handle it. It did work out perfectly so far, and it is showing us now that it is above this resistance line. The resistance line becomes support, and you have another day rally coming. That, of course, depends upon where we are at 4:15 p.m. OST this afternoon. If the market closes up here, this becomes support. If the market closes below here, it will be failed resistance, and it becomes resistance. Important to see where this day closes. If it closes above this line, it is bullish. If in turn it closes below this line at the end of the day, that makes it bearish. So important to see today's close. That was your Russell. Then I thought I'd show you the Nasdaq. We're reliving the video that we did just before this one. In the Nasdaq, we also had the exact same do or die level, and here's what it looked like. Here's where we were on Monday night looking at what we should do. Remember, we had a rally up one day, and then Monday we had a small day, basically an inside day, didn't do much. And, of course, we have to look at all the other markets. Now, can this be a bear flag building right here? This little 3 lines down, and then this? Absolutely, this can be a bear flag. So you got to keep that in mind, especially when the market's moving lower. So, of course, I have that in mind while I'm analyzing this. And I said, you got to sell into this resistance just like the Russell. See what happens first. If it breaks, then it was resistance. If it gets above, then it becomes support and we can go long. Let's start the day off selling first. And this is what happened. The market hit the line, got slightly above it, turned around, dumped, came all the way down here, Then it held where the Omni flipped to the long side today and got us long for the elevator ride to start back up. So the market did head right back up, and luckily Omni was wise enough to get out of the short trade and look to get long this market, behaving exactly as we said we would in video number 893 from this morning. But if you look at this, this can absolutely tell you that some kind of a bear flag may very well be building, and you do not have very long to go. Take this resistance line and turn it into a flagpole. And you very well may have a flag building here. Even this is your flagpole. Let's call it the whole thing. So cautious on how we proceed. I never expected the Nasdaq to do leaps and bounds. I only thought it would catch up to our Otapma, if you recall. So let's continue forward. Yes, we're bullish today. We sold it first. It came off. We got bullish. It's rallying, and we think it'll continue to rally. But we do not think that this is the beginning of the fall rally into the Christmas Santa Claus rally. That we do not feel has started yet. But let's continue with the charts. So we've looked at the Russell. We've looked at the Nasdaq. The reason why we wanted to be short this morning and then go long for the afternoon. Let's go look at the transportation average. Traders, the Dow Jones Transportation Average. Interesting how it did not get above the resistance. In fact, it just broke right down. I mean, it opened and dropped because when it opened, it was right around the time the indices were coming off and had their big dip. It dipped through the support, turned around, got back above, but the leader is not showing us the same look as the indices, as the Nasdaq has showed us, as the Russell has just showed us. Not a chance. This is showing us a completely different daily bar today. Very important to see where the indicators and where the daily settlement comes in on the leader today, the transportation average. Very, very important. If this is your leader and it has started a downturn, I don't care what Russell and Nasdaq are doing. I'm following this guy down. So, as far as I'm concerned, and not a lot of people have that school of thought that the transportation average is the leader. And basically, for a third of this year, it did not have its leadership qualities. For a third of this year, it did not show leadership qualities. In the past 6 weeks, it has absolutely regained its leadership qualities. Keep your eye on it. So it's not a constant. You can't always depend upon it. You need to know when it's leading and when it's backing off. Lately, it has been leading. Let's be careful. Then we talked about something very interesting, the 2-day rule in the dollar index. Let's go look. So here we are, the dollar index with the 2-day rule. We had massive rally going on here, right? Rally, rally, rally. Turns into what I like to call my infamous F flag. The F flag is here. Drops out of the F flag, so we remove it for now because we see it come down under it. And we look at it again and say, okay, we've been in a rally mode for quite some time. Down day 1, down day 2. What could that be? Very likely the 2-day rule, which means that after 2 big down days in a bull market, there's a very high probability that day 3 will start off lower and end up higher and go up. So with that in mind, and the fact that we had the do or die levels in the other indices, we opted to go short first in the indices. Another one of the reasons is because we were looking to enact or test the 2-day rule. Here is what happened today. The market opened and started to take off, traders. It literally just took off and looked like, oh my goodness, this 2-day rule is going to take effect. Since then, it has come back down and is towards the lower end. It's here right now, live as we speak. It's towards the lower end of the daily bar. That would make this 3 down days in a row. So, again, I keep stressing it's extremely important to see where today's settlements are. If this market settles somewhere up here today, then I assure you that the 2-day rule will have been what we just witnessed, and we will go higher. If, in fact, the market settles down here, it makes everything get a bit strange because it wants the dollar to move down another day, and it's certainly going to push the stock market up further. So the stock market has already gotten through its resistance, right? We've seen that in the Russell and in the Nasdaq. It's gotten through the resistance, and the support is starting to break in the dollar. If that's the case, Wednesday we'll see a lot of the same. Indices will go higher, dollars will go lower. How do we determine that? Where the dollar closes today. If it closes up, the likelihood of the S&P going higher comes to an end for the day. If it closes down, the likelihood of the S&P going higher becomes greater for today, tomorrow. So dollar is king right now. Sometimes you need to see it. Dollar is king. There is no two ways about this right now, traders. The dollar is king. Whatever it does, the other markets will do the opposite. That should do the opposite. The ones that are in tandem will absolutely follow it. Everyone is being led around for the last few days. Every other market's being led around by the dollar, and that hasn't changed yet. So this settlement, extremely important today. Please keep it in mind when you do Tuesday's analysis for trading Tuesday night into Wednesday. Let's move along. I want to pull another chart for you now. If you recall, traders, this rally began when 2 days ago we recognized that all the other indices were up at my Otapma and the Nasdaq was well behind. The Nasdaq was here. In fact, the Nasdaq was here. We said, not a chance. This is going to have to go up and hit Otapma. And so far, Nasdaq has been the laggard behind the pack, and it is now making its way towards that Otapma or Omni Trading Academy's proprietary moving average. Now, if you just take the resistance line, you'll see that we cleared the resistance line, as I showed you earlier in the Nasdaq, which will become support, heading up towards Otapma, trying to catch up to the rest of the pack. Look at your S&P. Otapma has been dusted. That is why we feel the Nasdaq will absolutely get up there, because the Russell, the S&P, the transportation average, the industrial average have all gotten above the Omni Trading Academy's proprietary moving average, and the Nasdaq simply has not gotten above or even close to Otapma yet. There's what we're expecting in a longer term view for this week. We are short-term traders. For this day, we're looking for rallies for the rest of the day. We would buy dips till the day comes to an end. If we get lucky, we'll get in. I think it will stay that way, but it will be based upon the settlements of the dollar index and these charts before I decide whether I'm buying or selling. For now, if we were to close right now at this moment in time, we certainly would be buying a dip this evening. Let's see where we go. Traders, I hope these classes help to keep you in tune with where the markets have been and where they will likely be going next. Thank you so much for tuning into my class. For you traders out there on YouTube, please come on down to livewithoscar.com and join us live for these classes. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.